Hi everyone, thanks for tuning in. You may have noticed this is the first time we've posted an episode for a while. Overseas moves and various other issues have got in the way, but we were hoping to come back with a few changes late this year. This episode is one we actually recorded about 12 months ago now, so please keep that in mind when listening. Also, since recording, Mark Hiriart has left OSL. We still think the episode provides some really interesting perspectives on the digital asset space, and that's why we've made some edits ready for release. We hope you enjoy and see you again very soon.
Welcome back to the Alpha Females Invest podcast. We bring diversified perspectives from the buy and sell side of the finance world.
As usual, any information discussed in this podcast is not financial advice. All opinions reflect those of the individuals, and this podcast is for educational purposes only. You should always read the PDS and talk to a financial advisor who can consider your personal circumstances before you invest.
Today on the show, we have Mark Hiriart, who is Head of Business Development and Sales for OSL in Australia. OSL is the world's first insured and SFC licensed digital asset platform, providing prime brokerage, custody, exchange and SaaS services for institutional clients and professional investors. Mark has had an extremely interesting and diversified career, and prior to OSL, had 15 years experience in trading, sales and structuring equity derivatives at large investment banks. Most recently, he was head of flow derivative sales at Morgan Stanley in Hong Kong before moving back to Australia in late 2020 to build the structured solutions business focusing on domestic asset owners. Prior to that, he traded equity derivatives for JP Morgan in Sydney and worked on the structuring and sales desk in both Hong Kong and London. Welcome to the show, Mark.
Thanks for having me. Pleasure to be here.
We are very excited for today's episode and to help break down some of the barriers around understanding crypto. But before we do kick off, I would love to ask you, Mark, what is your most embarrassing career moment?
Yeah, right. No, thanks so much. I've probably had a few. If you've been in investment banking as long as I had, there's probably a few. The ones that really stick out are the ones where you make your big first trading error. It usually happens probably in the first 6 months, and you get that sick feeling in your stomach. And they're good lessons to learn early on. But probably the best embarrassing ones is probably the disco shirt, or the concept of the disco shirt. I'm not sure if you're familiar with that one.
I actually haven't heard of that phrase, so please do elaborate.
Yeah, sure. So being usually a single male in finance, you have to have your shirts and your suits ready. And probably being a single male like myself was at that time in my 20s, just completely disorganized. So you have all your shirts ready, and what would happen is you get to the Friday and then you run out of shirts, so your work shirts. So you reach to the back of the cupboard and there's the one there that's too big, too small, it's got the flower print, purple, black silk. So I probably worn all of those into the office at some point. And everyone's like, Herriot's got his disco shirt on. So I'd probably say that's happened many times. But yeah, the disco shirt's probably up there for me.
I really do wish I had been there to see some of those disco shirts. I'm definitely going to keep an eye on people's Friday outfits now.
Exactly.
So let's start with simple. What is a digital asset? Does it include crypto, Bitcoin, and those other common phrases that we often hear about?
Yeah, sure. It's a good question to start with. Yeah, I think a digital asset is basically anything that has some sort of identifiable value and a claim of ownership. But this thing is purely electronic, right? So it could be Bitcoin, as you said. It could be an NFT of a monkey or whatever else, or it could be your favorite sword in your computer game that you're playing. So the criteria I kind of look at, and to be fair, like this is an ever-evolving space, and we're really new. But the way I like to personally look at it is: it electronic? Does it exist in the digital realm, not in real life? Does it have some value? And is there a clear way to define the ownership? So that separates it from something digital. So, you can have something digital, but it's not a digital asset. So before NFTs came along, maybe your profile pic on Facebook, that's something that's digital, but doesn't really have a value to it, right? So yeah, Bitcoin, Ethereum, all these other cryptocurrencies, they're all digital assets. And OSL, that's kind of what we do. We're a platform that allows people to access these digital assets.
So given they're in the digital world, as you said, and it has to have value, but how do you frame that value proposition? Some people do think that it's, a store of wealth or a payment, But what actual value do the digital assets hold?
Yeah, so digital assets is a very, very broad term, and it does encompass all those things you described, like cryptocurrencies, NFTs, security tokens, or anything else that I guess hasn't come along or been developed yet. So each of those different sort of assets in themselves can have their own sort of value proposition. So Bitcoin typically is seen as a store of value, a mechanism to have borderless payments, pristine collateral. Some people think of that as well. Ethereum, people think is like the world's internet computer, and all the applications that run on that. So that has a value, that network in itself. NFTs, and the value of that is effectively digital property rights. The NFTs are probably the first time you've enabled anyone to have sort of digital property rights, as opposed to property rights typically have been like a legal construct in the real world. So an NFT is a way of having that construct electronically. And so the first iteration of that is monkey pictures or CryptoPunks or these funny NFTs that are going around. And, there's great communities around all that stuff. But really, it's that way of having a digital property right which sets it apart. There's also things like security tokens. So that's the kind of a new and burgeoning industry. So a security token is kind of like a electronic digital tokenized equity, for want of a better word. And these can be used for, fund units, or can give you like an economic exposure to a company, just like an equity would. So that's going to be a hot area as well over the next few years, security tokens. So, as I said, we're pretty early. All these kind of digital assets will continue to evolve, and there'll be new methods of economic value and incentives that follow them. So I think that's the sort of sets the scene. And then talking about how people invest in them, like you are seeing a great deal of investment in this space, and not only in the sort of the publicly traded tokens that you hear about, but on the private pre-IPO space. There's probably last year was probably $35 billion worth of sort of private equity / VC style investment in this space. So, and that was probably greater than the sum of the previous 10 years. So like people are starting to see the value proposition in all these different things. And it is a spectrum of things. And this is sort of a trend that's continued to grow.
We're on the same page there about the trend continuing to grow. And that about the pre-IPO capital markets is super interesting and just goes to show how quickly this is becoming at the forefront of both retail and institutional investor minds. But I guess on the flip side of that, what are the key risks associated with digital assets? Sometimes you hear of these horror stories about people unable to offload their asset, or maybe it's been stolen or lost, given that the regulation really isn't as strict as other types of asset classes. Is that a misconception, or are those risks actually still real?
I think the first thing you'd always say is like any investment carries risk. And full disclaimer, I'm not giving any investment advice, and nor are you, I'm sure. But, the digital asset space is on the bleeding edge of like technology at the moment. And people are building things that invariably might break because they're trying something new, right? They're trying to do something new that's never been done before. And we saw that recently with the collapse or the falling of Terra ecosystem. It was trying to do something no one had really done before like that in that sense, and it grew too fast and it was unsustainable and it failed. But all these kind of new innovations, they are new innovations, which kind of makes it exciting, but invariably does carry risk. I'd sort of equate it to investing in like a small cap or a high growth kind of TMT sector in the equity space, where you see what's the term that people have, the internet companies with no revenue. There's like a basket, all this kind of stuff. It's like you have all this high growth stuff, people piling, they're bleeding money to try and get the business up and running, and they hope they get onto something unprofitable tech. That's what I'm looking for. It's the same kind of thing. So I'd think of it like that. And with any investment, you never put in more than you could afford to lose. And that goes without saying, whether that's equities or crypto or anything else. But you've touched on the point there, regulatory reform, and it's coming. And OSL, we set up, I wasn't there, but as a business, we were set up purely with the regulatory mindset from the ground up. That was the forefront of our founders' minds. It was to be able to create a crypto platform that was regulated, that can act or deal in a regulated world and face regulated counterparts. So that that's why the business exists. So we're pioneers, I'd say, in that regulatory space. We were one of the first crypto firms to be listed on our main board, sort of a public equity market. We were listed in Hong Kong. We were one of the first crypto firms to be Big Four audited. And so people like us are trying to bring the standards up. There's going to be regulatory reform. Invariably, there's going to be situations with this new technology where, investors unfortunately will lose money or projects will go down. But all we can do is try and provide those sort of safeguards around it. So give people full disclosure, vet the projects that we list on our platform, and sort of education, really.
I think that's an interesting point, and I do really want to dive into the OSL platform and how it works in a bit. But perhaps before we do, and I think this really ties into the whole concept of regulation, but the user experience in this asset class is often described as confusing because there are so many different types of digital assets, and it's hard to navigate that sometimes. So, from both your perspective and OSL's perspective, how are you breaking down that information barrier? And what are some of the easiest ways to get an investor's head around this?
Yeah, no, it's a really good question. I think there's a couple of things. If you're not a crypto native, it can be quite daunting coming into the space. There's like a steep learning curve. And even when you're inside crypto, people often say like the final boss of crypto, or the thing that's going to enable mainstream adoption is going to be the UI UX problem. What I mean by that, if you're dealing with these protocols, you're interacting on chain with wallets and wallet explorers and all this kind of thing, and whether it's DeFi, whatever it might be, it can be quite daunting. And so even something like MetaMask, which is typically like the wallet and the interface in which you interact with like the Ethereum network or ecosystem, that's become an industry standard. But you'd never get like my mum or my nan using MetaMask, right? And so enable to for crypto to have its mainstream adoption moment, I think it needs to get to a point where, and not just crypto, but digital assets in general, where people are using them and they're interacting with them and they're finding value, but they not necessarily know that they're using it. You know what I mean? So it's been sort of abstracted away. And I think once we get to that point in time, I think that will sort of, obviously there's other things that need to fall in place like regulation, etc., and the larger macro sort of environment. However, I think that's going to be the point where we reach the tipping point and things go mainstream. And then, yeah, as you say, there's so many different tokens, there's so many new projects, and it's kind of exciting. For me, there's the investment side, but there's also like it's like a Netflix series that's continuously on all the time, especially if you hook yourself into crypto Twitter. There's just new stuff happening every day. There's some scandals, there's gossip, there's exciting breakthroughs, there's everything. And so that's, for me, and I'm sure a lot of other people involved in the space, it's taken over their financial piece, it's taken over their sort of tech part of their mind, and now it's taken over their sort of like the media consumption part, because there's so much interesting stuff happening all the time. Like a day in crypto is like a month in the regular world. Yeah, there's always new stuff happening.
Great. Thanks, Mark. So I would love if you could please tell us a little bit about OSL and how the platform works.
Yeah, thanks. We're one of the original crypto firms. We started in Asia, and we're probably regarded as a leader in the regulatory compliant, security and transparent end of the market. So 2/3 or 2/3 of our founders are actually Aussie. Many of our senior executives and heads of businesses are all Australian. So we kind of see ourselves as an Aussie business, to be honest, even though we sort of started over in Hong Kong and now we're global. We're sort of an Aussie crypto firm, DNA level. Most of the staff come from similar backgrounds to myself, worked in banking, worked in Aussie banks, whether that's the front office or tech part. So we, from that early days, the founders and everyone at the firm at the moment, they're really focused on bringing that sort of institutional mindset to the digital asset space. So when a client interacts with OSL, we want to give the impression that it's not OSL on the other side. It could be a big bulge bracket investment bank. And that's the kind of level of service we're going after. It's just the asset itself is not an equity or derivative or commodity or whatever it is. It's a cryptocurrency or it's a digital asset. So that's a big part of our sort of business and our USP. And we're also probably one of the few licensed firms globally. So we are the first, and actually I think someone else just got it, but the first company in Hong Kong to be licensed by the SFC for Type 1 and Type 7 regulated activities. So we're held to the same standards as a Goldman's or a JP in Hong Kong under that licensing regime. So the service we give our clients is, obviously we aim to be of that standard, but also internally the governance, the reporting, or the compliance, et cetera, we're held to those same standards as an investment bank dealing in these activities in Hong Kong. So, that's kind of a big part of what we're trying to do. So, yeah, we've got sort of another different products that would suit institutional investors, but the main four, I would say, prime brokerage. So think of that as similar to what you'd get at an investment bank. So market access, synthetic trading, block trades. We have like a blocks desk, electronic algorithmic asset, like MSET at Morgan Stanley, etc. So electronic access to trading. So typical services a Prime would offer you. We have our own exchange. So that's a venue for trading cryptocurrencies. We have a custody offering in Hong Kong. So custody is obviously the safekeeping of these digital assets. It's like, was it Born Identity or James Bond or something? It's like military grade, Faraday cage, all this sort of stuff going on. So you need to be Tom Cruise to be able to even get in there. And then when you get in there, you can't do anything. But that's that custody offering. And then we have a SaaS business, which is basically a software business where we white label our tech and IP and work with institutional partners.
That's really interesting because it basically sounds like you're a big investment bank, but for crypto, just to sum it up really quickly.
Yeah, exactly. Or like a broker, like a well-developed, broker that offers all these sort of institutional services. So yeah, a good example would be an investment bank. You might have a stock borrow lend desk. We have a coin borrow lend desk where you can borrow and lend your coins. We try to take that blueprint from investment banking, which has worked for a very long time, and apply it to digital assets.
Yes, that's super interesting. And I assume as we progress in the digital asset space, more firms will try and copy this mandate because it really is a growth investment at the moment. And we touched on it a little bit before, but I would love to get your views on where you see the next steps for the industry on that regulatory uncertainty, which I think may be causing a bit of an overhang on the asset class, preventing the uptake of these types of assets.
Yeah, no, totally. Yeah, as I said, OSL, we've built the firm from the ground up to be a regulated entity that can, as I said, work in a regulated environment and deal with regulated counterparts. So regulation is always at the forefront of our minds, and we thrive in a regulatory environment. So the interesting thing about crypto or digital assets is it's global by nature, and it's cross-border. So you've got different jurisdictions approaching this in very different ways. So in order for like the mainstream moment to happen, you probably need, from my opinion, you need a global synchronization of the regulation across all these different countries. So you have common standards around, reporting or client segregation of assets or everything, best market practice, all this kind of stuff, and investor protection. Personally, you probably need that to be in sync globally in order for things to really take off. But you see major governments around the world, including Australia, they're all working on this problem. And it's a trend that is only moving in one direction. So Australia, for example, there's a consultancy paper with the Treasury at the moment. It's working through the Treasury Department on how Australia should regulate digital assets. Hopefully by the end of the year, that can be firmed up and get passed as law. Maybe next year, that would be great. And you're seeing in the US as well. Everyone looks to the US in the market. So if the US can get some clarity around its regulation, that's going to probably help other countries speed up on their own. But I say Australia in itself is doing a really good job, and it's probably one of the forefront pioneers, or if you want for a better word, or in sort of the regulatory space. But I'd agree with you, in order to this whole space, this environment, everything to take off and people to get more confidence in the industry and big end of town to deploy more capital, we're going to need the regulatory piece solved. But I think it's coming. In 2 years' time, the regulatory landscape will look very different to what it is right now. As I say, all the noises seem to be promising coming from, from what we hear, and you're seeing baby steps, but things moving in the right direction.
It's interesting when you say kind of global set of standards, because we're seeing a bit of that in the ESG market as well, kind of global best practice or global adoption of reporting practices. So it's interesting that's coming into the crypto space, and probably makes sense given it, as you mentioned, it is very much a global tool. And it's also kind of interesting in the context of, we did see a bit of deglobalization since the pandemic with concerns around energy security and supply chain disruption. But on the other hand, we're seeing this kind of globalized adoption of regulatory standards. So it's just an interesting contrast. But taking a little bit of a different step now, we've seen quite a lot of dislocation in the crypto markets and some downward pressure on digital assets. And I guess they've kind of called into question some of the risks around solvency of some of the key market participants. So I guess, what is your view on this? And also, how would OSL protect itself and its shareholders from these types of markets, if you can do that?
Yeah, sure. It's been an interesting couple of weeks, and I think you've seen, some people have said this is like crypto's Lehman moment, but you've also had the macro sort of picture deteriorating with the rate rises and and sort of supply chain issues, and sort of risk has sold off and crypto's kind of got the baby's been thrown out of the bathwater. But yeah, so it's coincided with some of these companies going under. So from an OSL perspective, as I said before, at the top, we run a very conservative approach to this space. So we were not impacted by any of the tokens or companies that you may or may not have read about in the press, just because we have very prudent risk management policies and very strong KYC policies, et cetera, et cetera. So we hope to come through this sort of, I'd say, a wobble unscathed and actually much stronger. But looking through to the market, most crypto people are quite battle hardened and used to 30, 40, 50% pullbacks any one point over the last decade or so. So your typical crypto enthusiast, let's say, these kind of pullbacks and the resiliency, it's in their DNA. But, I say, look at the broader picture, look at the growth, look at the stuff that's happening around the regulation, look at the institutional adoption and people trying to come to market and build infrastructure. I think the path is a positive one and it's moving forward. I think this recent month or 6 weeks has been a bit of a temporary blip, but we and I and everyone else, we do see it as a sort of a necessary sort of evil, if want for a better word, to create stability. There was a lot of leverage in the system. It's now been flushed out. People are going to take KYC and risk a lot more sensibly and be more prudent around those things. And hopefully the industry builds on this happening and becomes that stronger.
That's interesting that you're saying it's a very leveraged play and this is a reset. That's an interesting way to look at it. We are still at the infant stages of these types of assets, but are there any historical patterns that you can point to that suggest how digital assets should trade through a cycle? Initially Bitcoin was potentially thought of as an inflation hedge, but in this highly inflationary environment, it hasn't really held up very well. So is there anything we should look to or point to on how this asset class has traded in the past?
Yeah, sure. Because people, when typically talk about digital assets or cryptocurrencies, Bitcoin's probably the main one you look at. It's the longest serving and it's half of the whole entire market cap. So it's right to look at Bitcoin. But it's still relatively young, just over a decade old now. Bitcoin, the Genesis block came out. And so you compare that to other assets, it's really like the baby in the classroom kind of thing. But they're all still finding their feet. Even Ethereum, it's probably the most popular smart contract platform. But again, it's, half a decade or more, it's like give or take old. So it's very, very young. And these things sometimes do tend to trade like risk on assets, and sometimes they don't. Sometimes you see Bitcoin has got like a 99% correlation with the NASDAQ and the S&P until it doesn't. And then it just does its own thing. And you're seeing that at the moment. And people do watch the correlations, the short-term and long-term correlations quite closely. But, it will be super correlated until it's not correlated. And then the narrative changes. So, yeah, it's pretty interesting. The market we are seeing at the moment in crypto does have a lot to do with what's going on with traditional markets, especially what I mentioned earlier, to do with the equity markets, the macro environment, the central bank environment we're in. Regulation has come in. But yeah, I think regulation and that sort of macro will be the biggest influence on the market in the next couple of months. And crypto companies that have good corporate governance, got good risk management strategies, they've got good businesses, they're going to come out a lot stronger. And we, at OSL, we want to be in that basket or that category. And our philosophy remains unchanged. We want to keep delivering a market-leading institutional service for our clients, focusing on regulatory issues, risk management, compliance, etc., etc. So, yeah, it's a funny one. To some, I would say, given how young this space is, it kind of flips on and off in terms of like a correlation. So it's definitely you can't just sort of set and forget. You have to keep an eye on things and sort of trade or risk manage or size your positions accordingly to what's going on at the time.
Mark, can you talk a little bit about, there's regulation into the space, increasing interest, but perhaps what also might drive a step change is entrance from other large financial institutions. But obviously, typically, given their history, that they're a little bit less willing to take on risk, particularly in this asset class. But we are seeing some financial institutions start to dip their toe into this space. So do you think there's going to be a transformation in how these businesses are thinking about digital assets, and whether you think that this will start to drive some revenue streams for the bank, potentially some additional diversification?
Yeah, sure. No, and good question, because we're in a really good position to comment on this. As I've mentioned throughout this session, we're laser beam focused on institutions and professional investors, etc. So some of our typical clients would be banks, and we've seen from what it was like 5 years ago, 3 years ago, 2 years ago, to a year ago, it's definitely changed, and these regulated entities are definitely coming to the market. You can see this. We have a landmark JV with Standard Chartered in Europe. So that was formed last June in the UK under the brand Zodia Markets. So that's like a watershed moment in Europe for a sort of an institutional play by a very well or a household name like Standard Chartered. And also prior to that, we have public information. So DBS is a client of ours, and we work closely with them. So we provide a lot of the exchange infrastructure that they use for their crypto offering in Singapore. So clients like this are just sort of part of the roster of the top tier institutions that we work with globally. And despite the market conditions, as you say, the conversations we're having, I'm not seeing a single institution flinch at the current market conditions. They're doubling down on the narrative, they're doubling down on the build, the manpower. They're coming to market and they're setting up the infrastructure to be able to do so. And even during this volatility moment, you need to see inbound inquiries from high net worth individuals, brokers, banks, fintechs, everyone else under that sort of banner. We want to sort of figure out how to enter the cryptocurrency or digital asset market. You saw last month, JP Morgan came out and said cryptocurrencies are now their preferred alternative. They had a price forecast in Bitcoin. I don't know if it would be correct or not. And you also seen these other bulge bracket investment banks all setting up digital asset research desks or a research product. It won't be long before a lot of them have trading desks. So yeah, it's one way and the horse is bolted in my view, and it's only going to go in one direction.
What you said around people doubling down is quite interesting because it's not necessarily what people think is going on at the moment. So it's an interesting insight that the interest is still out there with those market movements. And probably that makes sense given that, they've significantly re-rated, and that may make an attractive entry point or be a trading opportunity. So it's insightful to hear that people are still interested in this space and taking an opportunity while it presents itself. But taking a slightly different turn here, and this is a little bit of a selfish question because we really want to understand this, but we're hearing a lot about the metaverse. Can you please briefly explain what this is, how people might be able to get into the metaverse, how it prevents an investment opportunity, and how that kind of fits into the whole digital asset space?
Yeah, sure. Bit of a buzzword, I'd say, of the last sort of 6 to 12 months, metaverse, and it's really sort of captured the public's imagination, that along with NFTs. I do think like the futuristic vision of the metaverse does seem to be like a utopian digital world. And I don't know if you've seen the movie Ready Player One by Steven Spielberg, but I think that's what most people would like to think or envision the metaverse to be. You can get in your unicorn suit and ride on a spaceship to some far galaxy to trade, and eat in some cafe or some whatever it might be. But I think in reality, the metaverse at the moment, there's people trying to build things like that, of course, but in reality, any sort of digital realm or interface or social network where people spend their time electronically. So a good example of that could be on Twitter. If you're on Twitter all day or Instagram all day, in a sense, you're in a digital network, right? You're in a digital world. You're not in the real world at that point. You're not present. Your focus and your attention and your time and your value propositions are all directed towards that thing, right? So in a sense, these are the original metaverses, and computer games as well as a good example, where if you're playing Fortnite or Call of Duty online or whatever it is, that is a sort of metaverse as well, right? You're there, you're interacting, you're talking to friends, you're spending time away from the real world. And what's quite funny is this younger generation, actually, they spend so much of their time in this digital realm that there's like acronyms in real life, like IRL, quote unquote, like that means they separate their online world from their physical. So it's pretty exciting. It's definitely bit of a generational divide, because you probably got people over 40, well, if you're in 40, you might have some kids who are playing around, you kind of get it. But if you're sort of 50 and above, then you might be like, I don't get this because it's not native to that demographic to be interacting. But if you're 20s or younger, then you spend so much of your time online, right? So there's companies now that are building these virtual worlds, and there's some of them being built on the blockchain. And there's famous ones like Sandbox. I think HSBC launched a branch on Sandbox recently. Snoop Dogg held a concert this is a virtual world that you can go and hang out in, and it's built with blockchain technology. But yeah, so there's what's reality right now, and it's kind of some of the graphics aren't great in the ones that are trying to be the metaverse. There's obviously the gaming industry, but what I really think is over the next few years, you'll see an explosion in this sort of like the intersection of gaming, VR, cryptocurrencies, the entertainment industry, retail, luxury brands down to your Woolworths or your supermarket, all colliding into this metaverse, and it will be augmented reality will be part of that as well. So yeah, metaverse is everything that's not in real life. But yeah, how it unravels will be interesting. But yeah, it's pretty exciting to see what's going on at the moment.
I'm so curious to see if I will be involved in the metaverse at some stage, because I don't think I've gamed since Sims back in 2008. So it would be interesting to see if it becomes, intertwined into daily life, because I'm definitely not a gamer, but I'm sure there's plenty of people out there who are, which presents a great investment opportunity. But at the moment, there's definitely still a segregation between real life and virtual worlds.
Yeah. Some are saying like the metaverse is the next, and I don't have the quotes on me. I can forward them to you for your show notes, but quite a few people come out in the last year or so saying the metaverse is like the next $1 trillion opportunity. Like the GDP of the metaverse is going to surpass many like in real life countries. It's quite crazy.
Yeah, that's fascinating. So then again, turning back to my favorite topic on ESG and sustainability, obviously the blockchain in which Bitcoin is founded on is quite energy intensive too, because you have to mine those Bitcoins, and that uses a lot of energy. Typically that energy source is coming from traditional energy sources, not necessarily renewables. How can we address this issue with digital assets? And is it across all digital assets? Because I know that there's some cryptocurrencies that are more energy efficient, but also any other sustainability issues that we maybe should be thinking about when investing in this asset class.
Yeah, it's a valid question, and it's got a bit of press this year. I'd say for your listeners who maybe not super familiar with crypto, just to digital assets, just give them a bit of a primer. So in cryptocurrencies or crypto technology or cryptography technology, blockchain technology, in essence, there's two main types of blockchains, and the technical term is like the consensus mechanism. So how do you arrive at the next block, right? How do you all agree on what the next block is going to be? Because that's what the blockchain is. It's just like a ledger that's continued to create new blocks of new information. You can see the historical, and it's moving forward in time kind of thing. So there's two types of consensus mechanisms: proof of stake and proof of work. So proof of work is what Bitcoin is based upon, and essentially requires computing power to solve a really hard algorithmic problem to complete the next block cycle. And then the miners are the guys doing this, and they get the Bitcoin as a reward for their efforts, right? Now, proof of stake is what got a lot of traction, greener publicity, let's say, in the last year or so. And it's what Ethereum has been moving over towards, and a lot of the other sort of layer ones are using. And this is a different way of doing things, but you don't need to create this or have this algorithmic problem or this proof of work. What you do is you have your assets on the network, you stake them. There's an algorithm that decides, but essentially by pledging these assets back to the network, you have like a right to the next block, or validate what the next block will be like. So it doesn't require that computing power or that intensity. So a lot of people have started to come out and say, what is the carbon footprint of Bitcoin mining and things like this? Given you said like a lot of the main input is electricity, and that's got to come from somewhere. Now, I don't think anyone's really done the maths or the analysis in it to a level where you could say one way or another, this is like the carbon footprint or this is the impact. There's so many different variables. But what you have seen is, as a result of this, you're seeing a lot of sort of new businesses come out with sort of a green Bitcoin mining angle to things. So trying to get their electricity from renewable sources. So whether that's like geothermal, solar, hydro, you're seeing a lot of these companies set up. There's a couple in Australia. You're seeing a few in like British Columbia is a big, in Canada is an area of a lot of them. And obviously, if you can mine from a sustainable energy source, obviously that's going to be better, right? So I think that's definitely a trend, and that's a trend like I personally welcome. And it's interesting, as you saw your ESG hat on, blockchain technology is actually now being a lot of people, and there's a lot of Aussie companies doing this, trying to come up with using the blockchain to tokenize carbon. So you can have a carbon credit, and you can have that immutability, as in a lot of people are sort of skeptical in the market about carbon credits and the origination, when they retired, and people rehypothecating, and there's some are like valid in one country and not another, and it can be quite ambiguous between different regions and domiciles, etc. So I think blockchain technology and digital asset technology, etc., can be quite interesting for this space, because you can have this like permanent record of this carbon credit that exists on blockchain, and when it's retired, it's gone. And you know where it's come from, etc., etc. So I think you're going to see an explosion in this stuff, and you're going to see new venues come up and a big drive in this industry towards those kind of technologies. I'd also say as well, like as OSL, it's like dear to our hearts. A lot of our founders take really passionate about carbon impact and climate, etc., etc. So as a company, we've got high energy use. We've got servers, etc., etc., running globally. We're really big on like net zero, like supply chains, etc. So we're one of the first to publicly come out with like a carbon neutral footprint in 2020. We've fully offset all our carbon footprints, like 28, like for the 3 years prior, and we've sort of retroactively looking to forward neutralize that as well. So we have an ESG report online I can put in your show notes as well. But so it is a big topic. I don't think it's like black and white on this is bad, this is good. But I definitely think as an industry, people are taking it seriously and trying to sort of move in sort of the healthier or sensible direction by, if you can mine with renewable energy source, that's probably superior to not, right? So yeah, it's definitely interesting. But as again, the industry itself is quite new. This is quite a new topic in a new industry. So there's going to be heaps of involvement and development and progress, I would say, over the next couple of years, because a lot of people are working on this stuff. So it's quite exciting as well.
I think that's key, that there is going to be so much development in both of those spaces in the next 10 to 20 years. I mean, ESG is obviously at the forefront of most investors' minds these days, and I'm sure it's also going to apply to this asset class and trend as well. So before we finish off this episode, Mark, I know you've had quite an interesting career change recently, from a large investment bank to working at digital assets. What made you want to do the switch, and how did you become so passionate about this area?
Yeah, sure. Crypto is definitely like a bug that gets you, it doesn't. Once it gets you, it's hard to know what life was like before. But yeah, I started the journey pretty long ago. Like I think it was about 2011. I came across Bitcoin and it was traded about $30 or something like that. And that was sort of around the time when a lot of the early exchanges were being formed. And I was lucky because I was in Hong Kong and it was kind of a hotbed for this stuff. So a lot of friends went on to found like successful exchanges and things like that. So kind of always kept an eye on it. Unfortunately, I sold most of my Bitcoin a long time ago. And that's probably why I'm still, not financially independent. Yeah, I remember when it got to 100 and I was like, oh God, that's crazy. But yeah, look at us now. And I'd always kept an eye on it. I kind of missed Ethereum, like when Ethereum still first came out, busy with career and life and family and stuff like that. But summer 2020 was like known as DeFi summer. And that was basically when you saw a lot of new applications being built on Ethereum. And a lot of them had like a financial sort of DNA to them. So like lending platforms, trading platforms, and all this kind of thing. That's DeFi summer. They were doing really cool stuff that probably people hadn't seen before. And then fast forward to last year, you saw a lot of these alternative layer ones come about, like Solana, Terra, Avalanche, things like this. And they're trying to take what Ethereum had done and take it one step further. And it was really exciting times. And I'm a bit of a geek. I come from a derivatives background. I like technology, etc. And it's just really captured my imagination. So this was all against like the backdrop of COVID. And we saw record stimulus packages being deployed by major governments around the world. And so that really accelerated the digitization of our lives, and because people were spending more and more time online before. So I just thought it was an opportune time to move over. I really enjoyed my time at MS and got to work with some great people and on some really interesting projects. But, I'm quite entrepreneurial by nature and just wanted a new challenge. Also one where I had more sort of involvement across every facet of the business. So luckily I managed to figure things out with our CEO, Wayne Trench, and my boss, Matt Long, up in Hong Kong and Singapore, and we got all the stars aligned, and yeah, that was it. The rest is history.
That's awesome. And you've obviously had quite an interesting career. I'm sure there's a lot of people in investment banks who are looking for something a little bit more entrepreneurial or to do something a little bit different in an alternative asset class. So we would be really interested to hear about your top career tip that you could share with us, please.
Yeah, sure. And as Clooney probably knows from my time at MS, I really used to enjoy like mentoring, or trying to, not even mentor, it's probably too strong a word, but get involved with like the junior guys and try and help out where I can. And, I had a quite really lucky or really fortunate to have a really interesting career. And I always tell people the same thing. It's like, whatever job you are at right now, you got to give 110, 120%. You got to give it your all, even if it's not exactly what you want to be doing. Because if you're not giving your all, then you can't put yourself in a position to have conversations about, mobility or things like that, because people won't take you seriously. So first thing, whatever you're doing, just do it as best as you can. Leave everything at the desk at the end of the day. Put everything into it. So that's the first thing. Then you got to network. You got to network as much as you can, any given opportunity, because you just don't realize when you're going to bump into these people again, or these opportunities are going to arise. So like the old saying that you make your own luck, that often comes from networking. Then be polite and as easy to work with as possible. Like, be the person people want to have a beer with or go and get a coffee with. Don't be the person people try and avoid, because you spend so much time with these people during the day. So if you're nicer to be around, people want to spend more time with you, which invariably means you stick around like longer and get the opportunities when they come. So if you do all the above, then I think you can put yourself in a position to don't be afraid to ask for what you want, but only do so when you've really put everything in, given it your all, seized every opportunity. And then if you feel like you've got like the collateral or the sort of the leverage on your side, then don't be afraid to put your hand up and ask for a change, whether that's overseas or internally, or do something different. Like, if you don't ask, you'll never get, but you got to sort of earn the right to ask. So I would say that's my top career tip.
That's awesome. Thanks, Mark. I've really learned so much throughout this episode, and I know that our listeners will as well. We can't wait to see what the future brings for both yourself and OSL. And as we've really touched on many times in this episode, it's clearly an area for investment that is still in its infancy, but really taking off at a J-curve speed. And I think we've recorded this episode in the metaverse to a degree, given we're all electronically recording from our geographical distances. But hopefully next time we can chat IRL. So thank you so much for coming on the show, Mark. It was great to chat and can't wait to speak again soon.
Awesome. Great to chat, and thanks for having me on.
Thank you for listening to the Alpha Females Invest podcast. If you like this episode, we would love your support on Instagram. You can find us at Alpha Females Invest. You could also leave a podcast review, but most importantly, please keep listening. See you next time.